So today's topic is standard costing. Okay. So costing is related to ascertaining the cost of a product, and standard here means let me give you a detailed explanation regarding standards. Standards are nothing but benchmarks. What do you mean by benchmark? Benchmark is something which is ideal. That means like if I have to say you something, see, like if I set some standards, then definitely I can compare my actual outcome with those standards. Because what I can estimate is, I cannot estimate what is going to happen in actuality, but I can definitely estimate what should be. What should something be like? Am I right? What should something be like? I can definitely estimate. What is going to happen in actuality? I can never estimate that. For example, if like I have to say there are some like accepted standards in the world, and there are some personal standards. So you know, the if you want to crack ACCA exam, the accepted standards are 50%. You have set your personal standards to be 70%. That means what your performance should be like, you are estimating today. Am I right? But what your performance will be in actuality, you cannot predict, you cannot estimate that. The actual outcome cannot be estimated. What is going to happen in actuality, no one knows. After 1 hour, I want to reach some place. That is what I have estimated. But definitely, will I reach there? Will I go there? Will I not go there? Will I reach like in 2 hours? Will I reach in 5 minutes? I don't know that. See, I cannot tell you what is going to happen in actuality, but I can definitely tell you what certain things should be according to me. Okay, that is standard. Now, when we set some standard, or when we decide what something should be according to us or according to me, then definitely whatever the actual outcome is going to be, I can compare that with the standard which I have set, or I can compare the actual outcome with something which I wanted it to be. Am I right? That is what it is. Now, so one statement if I have to give, this chapter is all about setting standards. Why we set standard is we can estimate what should be like according to us, but we cannot definitely tell what is going to happen in actuality. Okay, so when we set some standards, we can definitely compare these standards with the actual outcome. That is what we want to know here. So the point here is, if you want to pass the ACCA exam, the accepted standards are 50%. You have set a personal standard that for you to pass an exam, you should be a 70% performer. Okay, in examination you got 85%. Now, since you have set a standard, and since already there are some acceptable standards in the world, that means this is what everyone is accepting in the world. 50% is the minimum marks to pass. This is what it should be according to you, according to your levels you have fixed. Okay, the standards can not be fixed like that. Standards are fixed only based upon past track records, or like in reality what you have done in the previous past. So you have been always, you always have been a 70 to 75% student. So now you can fix a standard at 70% is what in any test which is going to happen, like before the final exam, any internal exams are going to happen, you are going to score 70%. That is your personal standard. Okay, and in actuality you scored 85%. Now what is happening, since you have set a standard, since there are already some existing standards, you can now compare these standards with the actual outcome, and you can definitely finally conclude how your performance has been. So your standards were 70%, which were already 20% more than the acceptable standards, and beyond that even 15% additional score you have scored. So what does it mean, is you are beyond all the standards and you are an exceptional performer. Fine. Now, if you get 30%, then definitely you are below the acceptable standards and as well as below the personal standards. So you are not a good performer. So what happens with this is, if you know your performances, how it is, okay, how your actual performance is when compared to standard, if you know that, there is always a scope of rectification, in the sense always there's a scope of improvement. Here, when you have scored more than like your standards, like more than 15% of your standard, in the future you can try to get more than that, even 90 or 95%. Okay, and here if you've got 30%, you can work hard and you can try to achieve this 70%. So I think the concepts are very clear. Am I right? Yes, Faisal? Hello?
Hello. Yes, sir.
Faisal, are you following? Yes? Hello?
Yes, sir. Yes, sir. Hello.
Yeah, okay. Okay, okay. Okay, yes, yes.
Yes, sir.
Now, coming to standard cost. See, in actuality, what the cost is going to be, you don't know that. That means, suppose you want to buy some material, you want to buy some product or whatever, you have fixed a standard that something according to you, if you are going to buy in a market, if you want to buy vegetables in a market, according to you, the vegetables for a week should come for 500 rupees, right? But when you went to the market, the actual cost happens to be 700 rupees. What does it mean? This you cannot predict, but you can always fix things as per your own your capacity, or like on an average what you have been seeing, that always whenever you go to market, the vegetables, when you buy 500 rupees worth of vegetables, it's enough for you for the entire week. Now the actual amount is 700 rupees what you need to pay. So what does it mean? Definitely the costs have increased. Am I right? The costs have increased in actuality. Now, point number two, suppose you are a manufacturing company. So you want to manufacture products, okay? You want to know the cost of a product, okay? You want to know the cost of a product. How will you know the cost of a product? If you go to the market, definitely you can buy the product and you can check the cost of that particular product. Am I right? That is going to be the actual cost. But if like that is when I'm speaking about trading concern, but here I'm speaking about manufacturing company. A manufacturing company always wants to like estimate the cost of a product. Always they want to estimate the cost of a product. Why they want to estimate the cost of a product? Because if they estimate it, they know, like, under all the circumstances and as per their past record or as per their past experience, all taken into consideration, they can make a product for 10 rupees. Am I right? Let's say they can make a product for 10 rupees. Let's say they are pen manufacturers. They can make a pen for 10 rupees each pen. This is the standard cost. This definitely can be estimated, and how to estimate this I will explain you right now. Okay. In actuality, this is standard cost. Okay. So this is the standard cost of a product. In actuality, the products in the market, are made for like 15 rupees. So now you have an edge. You are able to make the pen at a lower cost. Am I right? Than your competitors. Am I right? So you can make a pen for 10 rupees. That is the standard which you have estimated. And when you really manufactured, you were able to manufacture at 10 rupees itself. But in market, it is manufactured at 15 rupees, let's say. What is happening? Your performance is better than the market performance. Isn't it so? Come on, tell me yes or no. Hello?
Yes, sir.
Yes? Yes.
Yes, sir.
Because you have that cost advantage when compared to your competitors. Now, point number three. Since we have understood that we should always have a standard, because actual we cannot estimate what is going to happen in actuality or what is going to be the actual outcome. We can never estimate. Definitely, what we can estimate is like the standard. We can create a standard and we can compare that standard with the actual. and we can definitely understand how our performance has been. Okay, now let us start the topic. So in this particular chapter of standard costing, we are going to learn about what is standard costing, standard setting, types of standard, uses of standard cost, and the advantages and disadvantages of setting standards. And we are going to discuss about this pre-absorption, predetermined overhead absorption rates, and fixed and flexible budgets. Now, standard cost. A standard cost is a predetermined estimated unit cost used for inventory valuation and control. Definitely. So I already told you right now, standard cost is nothing but it is a predetermined. That means already before production, before actually producing some product, we are beforehand we are estimating the unit cost of that product. If we definitely, let's say, suppose we can estimate that product is going to cost us 10 rupees, and when we really do the production, it is going to be exactly of 10 rupees. Whatever the estimation we have done, the actual whatever we got is matching. Okay, there is no problem. But if you are making a 10 rupees and in market they are the other competitors are making for 15 rupees, it is good. When others are making for 8 rupees, it is bad. Then you can definitely do some necessary corrections, and you can try to, improve the efficiency of your production process and try to like produce that product at lower cost, so that you may have cost advantage. Okay, now let us see what is a standard cost card. Standard cost card shows full details of standard cost of each product. Now we have just now discussed that standard cost is nothing but the cost which you estimate for a product. How will you estimate the cost of a product? What are you going to consider, or what kind of cost you are going to take into consideration for finding out the standard cost of a product? So I will tell you, product cost can be estimated by taking into consideration direct material, direct labor, and overheads, manufacturing overheads. What did I say? Direct material, direct labor, and manufacturing overheads. Now these three combined together, you can get the cost of a product. How? Suppose I want to make a pen. One pen I want to make. This pen I can make like by using some direct material. So direct material I'm using 1 gram is costing me 10 rupees. So 1 gram of raw material is required to make one piece of pen, and that is costing me 10 rupees. Correct? Now direct labor. For making 1 unit of pen, labor is going to work for 1 hour, and for 1 hour I'm going to pay 10 rupees to the labor. Fine. Now manufacturing overheads. Now again you will face some problem related to manufacturing overhead. How and why? See, first of all, you should understand what is a direct material, what is direct cost, and what is indirect cost. Now, see, direct cost. Direct cost is something which is directly attributed to making of the product, or directly assigned to the product cost. You can directly assign this to direct cost, or these are the ones which are traceable, cost. I mean to say, these are traceable cost or traceable product cost. How I'm saying that? Now what is the meaning of a traceable cost and a non-traceable cost? See, if you are making a pen, for pen you want what? Direct material. Please tell me, raw material. You want it or not? Come on. Hello. Faisal,
Yes,
I'm
sir.
asking, for making a pen, you want raw material or not? Yes, you want raw material. If you are making a pen, you want raw material. If you don't make a pen, do you want raw material?
No, sir.
No. So since if I run this production process, I want this. If I stop this production process, I don't require this. Henceforth, these kind of costs which are required for making a product, and because of which the production process, because of this production process, these materials definitely are a requirement. These kind of costs are called traceable cost. What is that? Traceable cost. That means if
Traceable
I
cost.
run this production process of making a pen, definitely I require raw material. If I stop production, I don't require raw material and I will not pay anything for raw materials, right? I'm buying the raw material only for making the pen. Otherwise, I don't have any need of that raw material. So that means if for some process you are making some specific expenditure, you are incurring some specific expenditure, those are traceable cost. So here, if I want to make a pen, I want raw material, hence it's a traceable cost. And almost all the direct costs are traceable cost. Why? Because those are directly involved in making the product. All the direct costs are traceable costs. So what comes under direct cost? Direct material or raw material for making the product, and direct labor. Okay, how? See, for making this one pen, I require labor. If I don't produce this pen, do I want a labor?
No,
Yes?
sir.
No, definitely direct labor is also a traceable cost. So all the direct costs are called traceable costs. These are the costs which are directly required or involved in the production of a product. Okay. Now, what are traceable costs? Manufacturing overheads. Manufacturing overheads, though, are manufacturing expenses, but those are not directly, like involved in the production process. How? I will tell you now. There are 4 segments. In these 4 segments, we make 4 different products. Product 1, product 2, product 3, product 4. There is a factory supervisor. We are making a salary. Paying salary to this factory supervisor. Okay. So what happens? This factory supervisor supervises all these segments. That is segment 1, segment 2, segment 3, segment 4. Segments are nothing but different, different production facilities where productions happen. Okay, where production activity is taking place. So like, do you think the salary what I'm making to factory supervisor is a traceable cost? First of all, the salary to factory supervisor is a manufacturing cost. It is what? Hello?
Manufacturing cost.
Manufacturing cost. It is called manufacturing overheads. Why it is called manufacturing overheads? Because factory supervisor is just supervising the production process, but he is not directly involved in the production process. He is not going to the machines and he is taking the raw material and putting those raw material in the machine for production, or he is not like using the raw material which are the input and converting them into output. He is just supervising that process of production. He is the one who is supporting this process of production. He is the one just overlooking the process of production. Under him, all this process is happening, right? So let
Yes.
us now see whether the manufacturing overheads are traceable cost or non-traceable cost. This is an example of manufacturing overhead. It is a non-traceable cost, I said. Why? Because
Because it
factory
is
supervisor is not directly involved in producing
directly
the
involved.
pens. He is
Yes.
indirectly involved in producing the pens. How? See, one of the pens or in all these 4 segments is not directly involved in production process. Let's say if I am closing the segment 4, if I'm closing the segment 4, still I need to pay the salary to factory supervisor or not?
Yes, sir.
Yes, even though I run the production process in this particular segment, or I don't run the production process in this particular segment, I have to pay the salaries to factory supervisor. But whatever the product which is made in this segment 4, if I am closing this segment 4, I need not pay for raw material and I need not pay for labor. Am I right?
Yes, sir.
Because this particular segment where the product 4 is made, the raw material related to that product will not be purchased if this product is not made, and labor will not work if this product is not made. I'm closing this division, so I will not incur any expense for raw material and labor, but I need to still pay the amount to factory supervisor because he is not a supervisor only for this segment, he is the supervisor for all the segments of the factory. Am I right?
Yes, sir.
That is, henceforth, This is called non-traceable cost because he is not directly because it is not because of the segment the factory supervisor is working. It is because of all the segments the factory supervisor is working. Correct? He is not associated with the particular segment. Hence, that means I already told you, if I make the product, I buy the raw material. If I don't make the product, I don't buy the raw material. If I make this product or I don't make this product, it doesn't matter. I have to pay the salary to supervisor, right? So because of the closure of this segment, supervisor salary is not stopped. So this is non-traceable cost, right? That means indirect cost. But still, manufacturing overheads should be considered to find out the cost of a product. Why they should be considered? Why they should be considered? Because as per the US GAAP or as per the accounting standards, US GAAP is the accounting standard of United States. I'm speaking about as per the accounting standards. If you want to manufacture a product, raw material will be used, direct labor will be used, direct material, direct labor, and manufacturing overheads should also be used for finding out the cost of a product, because even though they are indirectly involved in the manufacturing process, but still their involvement is there in the even though they are not directly involved in the production process, they are always indirectly involved. Am I right? Yes.
Yes, sir.
Yeah. That's what the name is, manufacturing. Yeah. Now, definitely I know I will not take all the overheads for finding out the product cost. Now, just a second. Hello. Yeah. See, for making a product, I will take direct material, I will take direct labor, and I will take manufacturing overheads. Why will I not take administrative overheads or office cost? Because they have no role in the production process. They are not at all involved in the production process, either directly or indirectly. But manufacturing overheads are indirectly involved in the production process. Correct or wrong?
Yes, sir. Yes, sir. It is right.
Yes, they are not. Yeah, yes, they are not involved directly, but definitely for making the product, we are incurring some indirect cost as well. Those are manufacturing overheads. So this particular things I will take under product cost. And this particular thing I will take under period cost as per absorption costing. This is one of the types of costing. Okay. Now, so you understood, for making a product, these three things are required. This is not the cost which is anyways related to production. So we will keep it aside. And this we will show in the P&L account, statement of profit or loss. Okay. Manufacturing overhead, even though it is not directly used for directly paid for production process, indirectly they are definitely involved in the production process, because when we make a product, let's say now I'll give you the description. I'll give you. Direct material is the raw material which you make for production, which you use for making the product or which you use in the production process. Direct labor is the one who is working on the machine. Manufacturing overheads. Now, when it comes to manufacturing overheads, you will take indirect material. You will take indirect labor. You will take you will take indirect expenses. Okay. And here also manufacturing overhead is again divided into variable manufacturing overheads, fixed manufacturing overheads. Fine. Now, what is indirect? See, direct material is the raw material for making that pen. What is indirect material? Can I tell? Can I say the oil which you use for running your machine? Say, if your machine has to run, what has to be applied to the machine? Machine oil, correct or wrong? Yes. Hello.
Yes, sir.
Machine oil should be used for running the machine, na? So machine oil is
Yes,
not
sir.
a direct is not a raw material for making this product, but it is the one without which the machine cannot run. Machine is very much important for making the finished goods. Okay, by converting this raw material into finished goods. To run that machine, we need oil. So this is supporting the manufacturing activity, right? Yes. Without
Yes,
oil,
sir.
machine will not work. So oil cost is also to be considered under the product cost. Okay, because this oil you are bringing for what purpose? For maintenance of the machine, for running of the machine. Okay, so definitely, even though this is not a direct material in making in the, it is not a direct material in the in the product which we are manufacturing, it is an indirect material. Definitely the cost of this also should be considered. We want to recover this cost also when we sell the product to the market. Now, so this is related to just product cost. Okay, total cost is different. In total cost, you will take direct material, direct labor, manufacturing overheads, and administrative overheads, and selling overheads. This is what you will be considering under total cost. But I'm not speaking about total cost. I'm only speaking about the product cost. Okay, to make a product, what you need to consider. Now, are you understanding, Faisal?
Yes, sir.
Hello.
Yes, sir. Yes, sir.
Yeah. See, this is total cost. In total cost, you will take everything: direct material, direct labor, manufacturing overheads, administrative overheads, and selling and distribution overheads. Then you'll get total cost. Why this is very important? Because you want to know whether, like, how much margin you're going to add to this, profits you're going to add to this, and you're going to sell at what price in the market. For that reason, if you want to sell a product in the market, you should definitely know what? Total cost. But if you want to manufacture a product, you should only know product cost. Why? Because if I am finding out the product cost, it is, I am able to make a pen for 10 rupees, let's say. This is my product cost. So what I can do is I will check other markets in the world. In China, if I can get this pen for 8 rupees, I will not do the manufacturing for this particular pen. Why? Because same pen is available for 8 rupees in China. So for me to decide whether to produce or not, I should know what?
Product cost.
Product cost. Okay. So so oil and indirect, indirect labor is nothing but the one who are used for packing purposes, factory supervisor, helper, all this. Indirect expenses can be anything like power, electricity. Okay, these are all required to run the machine. Otherwise, the machine will not run if the electricity or power is not available. So for all this, we are paying now. Henceforth, we are paying all this money for electricity, power, factories for, because we are doing the production. Okay. Henceforth, even though they are not directly traceable to the product cost, okay, but we are incurring those costs in the production process, we have to consider them. Fine. Now, because there is some involvement of those manufacturing overheads or cost in the production process. Now let's see what is the standard cost card like. Standard cost card, you'll take direct material, you'll take direct labor, direct material here, metal X, metal Y. 3 kg is required to make metal X at the rate of $4 per kg, and 9 liters is required to make material Y at the rate of $2 per liter. So henceforth the entire cost is 12 and 18. So this is direct labor, 9 and 16. So 6 hours labor is working $1.50 per hour, and it is total $9, and 8 hours grade B worker is working for 2. We are making $2 per hour payment, $16. Okay. And then you have the direct cost, you have variable production overheads. So example can be electricity cost. Okay, you have variable cost of production, standard variable cost of production, and here what we are doing is, this is the standard cost we are going to find. This is the estimate we are making for a product which we are going to produce, okay, or make. Estimate is nothing but we are finding out the product cost beforehand, or we are estimating the product cost. Why? Because when we really produce the product, what is the cost going to be, we are going to check, and we are going to compare this cost with that. Okay, and we are going to see whether what we estimated is more or less than what in actuality we have incurred. Let's say the standard cost here is, let's say, standard full production cost. This is what is the cost of the product. Let's say I'm not speaking about total cost. Total cost will be nothing but after getting the standard cost of the product, which is 125, you are also taking administrative overheads, which is not involved in the production process. But still we are adding that to the product cost because we want to find out total cost. So product cost is 125, administrative overhead is 15, and the standard and here what we are getting is total cost. That is total standard cost 140. Now we are adding 20 rupees margin and we are selling at 160 rupees. Okay, but this is what is the total cost. I am not speaking about total cost. I am speaking about the product cost. So the product cost is, if it is 125, let's say for making one product we are incurring 125, and when, like, this is the estimate. Okay, estimate, we have estimated now, but in actuality we are only able to make it for 100 rupees or $100. Now say what is happening, definitely our like in actuality we are able to make it lower price. That means more efficiently we have worked on the process and we are able to make it less cost. Definitely it is good for our business because the cost has got reduced. Correct or wrong, Faisal? Right? Did you understand all these things? Please tell me.
Yes, sir. Yes, sir.
Please go through this once, Faisal.
Okay.
Faisal, just give me, can you give me 5 minutes of time? I'll be back.
Okay, sir.
Yeah. Okay. Okay. Just give me 5 minutes. Yeah. I'm calling back. Yeah. I want to finish this chapter today. I'll finish it. Just give me 5 minutes.
Yes.